In this video, we're going to talk about actually placing a long put. So this is going to be a debit because we are purchasing a put options contract. Now, it's kind of like the same thing that we're looking at on the put side as the call side, right? So what is the first things we look at in here that we just discussed for placing a call? We discussed the bid and the ask, the delta, the volume, and we want to see how deep in the money we can go compared to our own risk profile. So over here in our puts, you can see that the stock in here in AMD in our March expiration is currently trading at 131. So if we were to take the first in the money contract right here, we can see that it's worth $400 and it's at the 101 strike. So we really only have 70%, or I'm sorry, 70 cents of intrinsic value in here. That's really not a whole lot for us. We want to have a couple dollars or at least $1 in here of intrinsic value to help us out. If all things being equal, we do expire in the money, or I'm sorry, if the stock does not move and we still expire in the money exactly where we purchased it, we still want to have a little bit of intrinsic value, a little bit of premium in here. So we're not actually going back to zero and getting rid of everything, right? So this 102 strike in here would actually be better for us because now we have $1.70 of intrinsic value. So we're purchasing these for a little bit more, $455. So 4 cents, $4.55. You multiply everything by 100 because that represents the 100 shares of stock with your underlying here. So we're purchasing these for 455 bucks. If all things being equal, we expire right at 130. We are going to have about $1.70 of intrinsic value in here, or that's 170 bucks that our options premium is going to be worth. And that's what we'll have. It will not be zero. Whereas if we purchase 100, even though we're still close enough to the 130-cent mark there, we are still technically out of the money. So this $350 right here, this $3.50 would expire at $0 if AMD actually expires by March 21st at this level that it's currently trading at. So in here, we're going to look at purchasing this because our underlying assumption is going to be we want AMD to go down. We have an $8 expect or $7 expected move in here by March 21st. So we have a couple weeks to kind of milk this out and see what's going to happen in here. But we want AMD to decrease in value as quickly as possible, right? That's what we're thinking when we are actually buying a put. You buy a call, you want the stock to rise. If you buy a put, you want the stock to go down. And because we are options traders, we are not using these to get long stock in this particular instance, right? So we are going to use these options as cheap ways to participate in large moves in bigger underlying assets and to take advantage of those, participate in the move, take advantage of the big $5 couple dollar swings we get in here a day, and then kind of get out, make our premium go up if we're purchasing, and then kind of sell, take our 20 to 45% and get out of there, take our profits. So we are going to purchase this 102 strike right here. And then our goal is that AMD is going to decrease in value or trade lower than its current price, 100.3, as quickly as possible, so we don't get eaten by our theta that much. You can see our theta is only $12, so it's not a whole lot. We're not going to lose that much money each day in here, just if the stock stays the same. But our delta in here is at 56. So even if tomorrow, let's say AMD trades $1 lower, all things being equal, it's going to trade at 99.31. Well, that's going to make up for our delta that we held it one day. So just because we held it one day, we're going to lose 12 bucks of our premium. So this is only going to be worth around $4.40. But we're going to make up in our delta that dollar decrease, and we're actually going to increase right around $56. So this is negative because the puts are we want the stock to go down, right? So your delta for your puts are always negative, but the delta for your calls are always positive. And that's just because of the direction that the stock is going. That doesn't mean that we're going to lose $56 if the stock goes in our direction here for AMD. Now, if it goes the opposite way, if AMD increases a price in $1, then we are going to lose that 56. But just because it has a minus sign doesn't mean we're losing that no matter what. If the stock does go down in our direction, we are going to gain money here in our premiums. And that's just because puts is for the stock to go down. So our theta is not going to hurt us that bad. Our delta is above 50%. We still have $1.70 of this intrinsic value in here, yet we still have a lot of our volatility still sucked in here. So we could get a nice rip in our direction here quickly. So this options price can increase as soon as it possibly can for us to kind of take our profits and get out. So that's kind of what we're looking for. If we're purchasing something out here in this 98s, well, let's just see what happens in here. We'll delete this leg. We'll purchase the 98s and look at the difference. Our delta is still here, but, or I'm sorry, our theta is still at the exact same, but our delta is dramatically lower, right? So you got about 20 cents that you lost on your delta just by moving only four strikes, two out of the money. And also, even though it is cheaper, yes, our volume is lower. Our spreads are pretty much the same, if not better for us here. But we are out of the money. We are a couple strikes out of the money, and our delta is in the 30s rather than the 50s. So we have a worse chance for this option to expire in the money. And also, this theta is going to increase drastically the closer we get to March 21st. So even though we get a $2 expected, or we get a $2 move in here in AMD, let's say by tomorrow, well, then if we want to hold on to it until expiration, there's a chance that AMD might run away from us again, right? So whereas if we purchase something in the money, we get that quick move, boom, we get in and out, we got our 20 to 40%, we're done. Whereas here we get the quick move and we say, well, it didn't really give us exactly what we wanted percentage wise. Yes, it did, but really we're only adding 39 cents on each dollar move. Let's hold it the next day. You hold it one day, you're going to lose that 12 bucks, and then say AMD starts to run away. Well, then now you're all of a sudden you're playing catch up, right? Whereas before, if we purchase this 102 down here, then we are already going to have that intrinsic value built in there, and we still have enough of our extrinsic value that we don't have to worry about. So again, purchasing puts, basically the same thing as purchasing a call. We're just expecting that AMD is going to go down. So we're buying this 455 bucks. We're looking at our delta. We are above 50%. That's good. Every dollar move we get in our direction, we're going to make that every day. We're going to lose $12 here because of our theta. Our bid and our ask, even though it is kind of far away, we're still pretty liquid here on our volume. So we can take advantage of that so we can get out. It's not that bad in here, even though it's only 100 contracts traded. That's why the spread is wide. We can still get out if something goes wrong. And we still have our built-in intrinsic value in here. We're not just holding all this extrinsic value. That's why we're deep in the money here. I'm not sorry, deep in the money, but we're pretty good in the money, right? By a couple strikes. So this will give us time in here to see what AMD does. So all in all, that is what we're looking for when we're purchasing a put. We want the stock to go down. We want to look at our deltas, our volume, and then we want the stock to go down as quickly as it possibly can. So then we can increase our options premium here that we purchased, maybe by 20, 40%. And then once we hit our targets, then we can get out as quickly as possible. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials below. If you have any more questions about purchasing options or how options actually work, feel free to check out our YouTube channel. Also, feel free to check out our Discord server. We have everything in there that you guys can need for your trading education.